It's June, and we have a market update for you for the Austin real estate scene. I'm David Shapiro with my colleague Lee Abraham, local realtors, broker here in Austin, Texas. If you have any questions, feel free to comment below, reach out to us. We'd be happy to chat with you more about whatever you have going on with real estate. All right, so let's dive into what's going on. Remember, you can always find us right here at realestatevideohub.com. That's our YouTube channel. So let's take a look at active listings. So up again from what was a several year high of 3,500 up to 3,800. So one of the things we talked about last month was, wow, the demand and supply are going in opposite directions. It is not looking good. We were feeling quite bearish. And this is going to be our chance to see, does that hold true? Is it going in the bearish direction? And first indication with more listings, not looking so great for the real estate market. But of course, there's way more to the story. So let's keep diving into the stats.
And I like the way you position that, David, because yes, the number of active listings are up. But contrary to the indications from last month, the monthly housing inventory has retracted a bit. And so what we mean by that, if we take the 3,866 active listings, we've seen a big jump in pending sales, over 800. That translates to a 4.7 month housing inventory. And then we actually, quite frankly, missed the forecast for what the closed sales were going to be for this month. I was forecasting a much more anemic number. We did record a little early last month, and apparently there was a significant number of transactions that got put into the system after we did our recording, and I'm suspecting a lower than typical number falling out of escrow because we were basing it on pending sales. So when we look at the number of closed sales in the past month, it's nice compared to what we were forecasting, 798. So right at a 4.8 month inventory. Bottom line is that the more current indicators are telling us we're just under 5 months. If you go back 3 months and over the 12-month average, over 5. But for forecasting the next few months now, this is an optimistic number that puts us more on the sunny side of the street, David, rather than going down that long, dark alley of a declining market. So this is a good view.
Cool. And that's good to hear. I mean, we don't really do much prep. I don't do much prep. Like, we don't talk too much. You do your prep, I do some research, and then we just hop on here and talk through it. So very cool to see, because, you know, what you hear out there from the macroeconomic stuff is very uncertain, and it doesn't necessarily feel like we're going to see any sort of improvement in the housing market here in the next couple months. So good to see that maybe the sunny side of the street is where we're landing.
Right.
And here we can see that 30-day monthly housing inventory charted over the last couple of years. Again, if you're watching for one of the first times or you haven't watched recently, here's where we were in the hot season, early 2022. It looked pretty similar in 2021. And then the rise in interest rates increased inventory. We've kind of been oscillating here between, 2.75. We've got as low as 2.25 months of inventory up to about 5. Last month, we saw this 5.2, which was like, what's going to happen here? And now we can see we're modulating kind of back into our 5-month housing inventory range. So good sign there.
All right, so we're looking at the number of sales per month, and we're down a little bit, David, year over year, just over 10%, up month to month, about the same margin, just over 9%. So really, not strong numbers by any stretch, so don't misunderstand the sunny side of the street quote. It's more relative to what it could be. And so just under 800, we'll take that. But again, we'd like to see that number go up to keep things in balance.
Yeah, we can give some anecdotes here in a minute once we get through some more of these stats of kind of what we're seeing from clients. So here we have the average sales price, and holding at 853,000, up year over year and up month to month. And this is for single family homes within the city limits. So keep that in mind. So we're below. This was the all-time high. So I was very curious to see where we landed in May of this year, because May of 2022 was the all-time high. And so good to see that we're up over the last 2 years. but I haven't done the math yet. Let's just see. So we from 914,000, that's down 61,000. So that's about a 6.7% is what we're down from the all-time high. Really not that bad considering everything that we've been through. That's all we're down on the median price within the city limits.
Yeah. And again, with the sunny side of the street report here, this is the 5th month in a row where we're up year over year, David.
Yeah. So showing some stability where we are,
Right.
although sometimes I think buyers, well, and maybe more especially sellers, when they're in the market trying to sell their house, that's not how they feel. So there's a little bit maybe of a disconnect, and I think it goes to the hyper local aspect because we do see clients in certain neighborhoods where their house sells pretty quickly, and there's been some cases of multiple offers, although those are few and far between. I would say, and I'd be curious your thoughts, kind of when I'm looking at it, what's happening. School districts, that seems to be the narrative right now. That's the one thing, if you're a parent, you want your kid in a good school. You don't really care what's going on with the macro environment. You're going to make the changes necessary to take care of your family. And I've seen that as a driving force with several clients. And I was, very proud of the way that you executed with a client in a very challenging market to be able to do hey, we're going to sell our home, then we're going to go buy another home. And with limited inventory and transactions happening, we're able to execute that, negotiate a really cool 3-month opportunity for the clients to stay in their current home while they found their next home. And they're very happy, excited about their upcoming move into their new home, into a better school district, was really the driving force there. We had another client who also really was targeting a good school district. And so I think that seems to be a theme for me. What's really driving is the life cycle events that we talk about. People can't live, I give the anecdote, I've given it before on here. A guy I know in a 2-bedroom condo with 2 young kids, and he worked from home. And he tried to hold on to his 3% mortgage rate, but he just couldn't hold on any longer. He needed to get into a house. He needed more space, and finally made the move and jumped to that, 6.5%, 7% mortgage range, which is what we're at right now.
Yeah. Very few things will change your priorities like a growing family. And you'll do things for the kids way faster than you would do for yourself. So you're right on point, David. The school district is a key variable. And the correlation here in Austin, we have a number of good school districts. But when you combine a top-rated school district with the luxury home, modern design combination, those are the properties that in many cases, at least with our clients, we're having some nice success with.
Yeah. All right. You want to tackle days to sell here?
Sure. Let's tackle this darn thing. So this is in alignment with our sunny side of the street theme. Days on market are down. 41 is not the breakneck pace that we saw in 2021, 22, but it is a drop from the previous months, basically in line with last year, 39. So this is a nice number, nothing really dramatic, just an indication of general stability in our market.
And then our sales price to list price ratio, I was curious to see here. We've got it's down a little bit year over year, month to month, 0.4%. I feel like this holds true with what I'm feeling in the market. Not a huge drop, but there is a little bit more negotiability for sellers, and buyers are able to get a little bit of a better deal. Across the market, it's small, but on a individualized basis, we just had a client close on a home on Lake Austin. And I feel like, there was a big inventory in that little hyper local market that allowed him to push a better deal on his purchase. And so there's some opportunistic buyers out there that are moving at a time where this might be the last time where we see this type of opportunity for buyers, is my opinion. We'll talk about the forecast for mortgage rates, that being the real big thing impacting everything. And only thing I really see holding back, stock market is almost back to all-time highs. That wealth effect for people if they're looking to make a move, they've got the assets. Now all they need is the cost of owning the home to come down. And that's where mortgage rates come into play. And we'll talk about that in a minute. But here it kind of shows me maybe some better deals out there for buyers.
Yeah, there's definitely opportunity, and particularly the waterfront property, Lake Austin properties, is a real nice opportunity for anybody that has coveted waterfront property. As we're looking at the sale price list price ratio over the past few years doing these reports, David, I think we both gained an appreciation for how nuanced it is and generally reflective of market sentiment. The other thing that I'm thinking about just from the calculation standpoint is, have local agents become more efficient, more effective at pricing property? And is that keeping things in line? So when you've got, kind of rapid demand increases like we did back during the crazy sellers market, or conversely, when interest rates were rising quickly and agents were scrambling to kind of measure that, has this sort of stability 5 months in a row of year over year price increases, has that helped agents do a better job? And I think that's, one of the dynamics in the sale price list price ratio, because that's what we're measuring. What was it listed for and what did it sell for? So, I don't know, miscellaneous comment on a fascinating but slow moving statistic.
Yeah. And I think back to 2011, 2012, I had an investor and he was very focused on this number. And he's like, I want to get 3% off the list price because that's what homes sell for, 97%. And so interesting to see where this to me is the standard number for what the list price to sale price ratio traditionally has been. Obviously, you can look at it over the last 4 years, and it's been a huge range, as high as the teens. But that is an anomaly, and really, this feels like the standard. And I think I shared this story with you, Lee. But I was at a real estate agent event, and an agent came up to me. He goes, "Hey, I see your name tag. Are you David Shapiro from the Shapiro Group?" And I was like, "Yeah." He goes, "Oh, Lee, you do a presentation to agents every month with some similar statistics." And he was like, "Oh, those stats that Lee presents are amazing." One of the things he mentioned was that some people use a different sales price to list price ratio. Can you maybe explain whatever you explained to him that he found so fascinating?
Yeah, I mean, when we look at the sale price list price ratio, there's basically two categories of that statistic. We use the list price at the time of sale. And the logic there is because when we're working with buyers, that's the ratio that we're looking to inform our offer strategy. However, the MLS also keeps the original list price to sale price ratio, and that's what did a listing start at. And so that, in my view, is a less meaningful statistic because it doesn't take into account the efficiencies of the market when a sale actually happens, and allows the inefficiency of agents pricing property to potentially inflate the ratio, which can be misleading if you're relying on it for tactics and strategies.
I'm just going to play devil's advocate. If I'm a buyer and I'm saying, yeah, but doesn't that show how much the price had to drop to get to, if you go from the original price down, obviously these percentages would be lower, right? And so doesn't that show how much people are decreasing their prices in order to get it sold?
No, I don't think so. I think from my perspective, it allows non-market variables such as an agent's ability to price a property to have a significant impact on the number, whereas the actual list price when it sells is a market-driven dynamic that reflects the market much more than the original, which oftentimes reflects the agent's opinion on what the price is.
Okay. So we're trying to remove this variable that maybe the agent didn't do a good job pricing it. And we just want to see market forces.
Right.
Once it gets to the right list price and then it sells, what's that percentage?
Correct. Because of my background as an appraiser for many years, I tend to be a grumpy old real estate agent when it comes to the average realtor's ability to accurately price a property. If you're looking at model matches of the same floor plan in a tract neighborhood where you've got the same floor plan built in the same year by the same builder and everything's the same, sure, that's kind of easy. if you're on Lake Austin and you're talking $5-7 million and what's it worth, there's a lot more to it, you know?
Yeah. And so, yeah, some of these homes can start at $7 million and end up selling for
Right.
$5 million. And this is like a whole nother conversation where we're talking about with clients that have unique properties, and they're saying, well, what's it worth? Sometimes you just got to get it on the market and see what buyers are willing to pay for it, because the property is so unique. There aren't like great comps. It's not a cookie cutter house in a cookie cutter neighborhood where you can point to three homes with the same floor plan, is what you're saying.
Right.
So there is some more nuance with pricing it. That's where your background as an appraiser is really helpful. And then sometimes we come up with a range. It's always a range, and it's like, all right, let's get it out there at a price in this range that you're comfortable with, Mr. Seller or Mrs. Seller, and let's see what the market's willing to bear.
Yeah, absolutely.
All right. I hope people enjoyed the aside of us kind of diving into some of these things. If you have any questions on that, go ahead and throw them in the comments. I've thrown out some anecdotes about school districts. I'm curious, like if you're out there looking to buy and you're trying to make a move in this market, you're in the minority. I think you're making the right move and buying with higher interest rates and being able to refinance later. Although if you brought me back to 2022, right before rates went up, and told me, hey, it's going to be 3, maybe even 4 years before we even see this go back to a normal market, I would have been shocked, right? We would have thought that people would be refining now at lower rates. And I've talked to several builders in the last couple of days that are, we're talking spec builders. They're investing, putting their money on the line here to build homes and saying, dude, I am shocked. Like, this has been a tough market. One builder in Austin was telling me that the only people building right now, because I think what I find interesting is, people see homes going up all over the place. There's only two types of people, he said, that are building right now. People that have builders that have a real niche, and they kind of have narrowed in. They maybe got a good deal on the land. Maybe even they bought the land several years ago at a lower cost basis, and they're able to make some money. And then people that don't know what they're doing. They're going to lose money on those deals. And so that's really it. And that's a slim number of people that are able to build in this type of environment.
Yeah, it's tricky.
Yeah. So anyways, if you're out there buying, curious to hear kind of what's motivating you. Is it schools? Is it something else? Give us a comment below.
Yeah.
All right. New listings, Lee. What do we got?
Well, new listings are up a little bit year over year, down a little bit month to month. It is the highest number for the month of May going back several years. And so from a supply-demand standpoint, as long as demand is ticking up to kind of match the listing activity, that stability for values that we've been seeing for average prices should stay put. No real story here, David. It's kind of in alignment with the other variables.
Okay, and on to our listing inventory barometer. So this is something that Lee came up with, and this is the best way to look at real-time data. And so if you're new to this, here's what we got. The 100% line is what we're focused on. These little areas here where it's below means that there's actually been more sales than there have been new listings for those weeks. And then the rest of the period where it's above, which is the majority, is when there's been more new listings, inventory is growing, and that's been the majority of what we've been seeing over the last couple of years. You can see a big spike here just going back, what is that, 5, 6, 8 weeks ago? Big spike. Each of these is a week. But we're still building inventory. So what do you want to point out here, Lee?
Well, I think that the line, the graph that you were just showing, the bar chart there with that crazy peak, that's what caught our attention, David. That's what we were looking at last month. And the question is, what are we going to be looking at now this month? And so you can see just visually that we're in a much better spot. When you've got the number of listings out of control relative to the number of sales, you're going to have price drops. And that's what we don't want to see. So as we look at the chart to the left, you'll see outlined in red the number of listings added or lost for the week just based on what's been listed and what's been sold. But what we've been doing as the market softened, with the rising interest rates, is now we can go to the next slide right there, where we're basically now incorporating the number of expired and withdrawns. So those two yellow highlights towards the top of the graph, those were the past weeks, the most recent weeks, where there was an actual reduction in the inventory because of withdrawals and expires. Well, that hadn't been happening for several months. So if we take a look at where we've been over the past month or so, the data visualization chart, even on the right, is a good way to just take a look at, the actual inventory has been growing, but not quite at a pace where it sparks concern. If you look over the past year or so, where we've been over the past month is more in alignment with those kind of numbers. So
Yeah,
a
so
lot of
you're looking here where this is less of a concern than what we
right,
were looking at a month ago, which was here. This was
correct,
concerning. If you look
right,
back over the last year, there's only 2 weeks in that range over the last year. And then all of a sudden we had a handful of weeks in that range, but it seems like it's moderated and it's not getting out of control, going in that very bearish direction, which is a
right.
good sign.
And if you click to the next slide, if I'm not mistaken, you'll see the ratio. Okay. And so you can see that over the past 5 weeks, it's been under 200%, which basically means that there's been less than double the number of new listings compared to pending sales. Click one more time, the miracle of PowerPoint and the magic of these data visualizations. You can see that, oh my gosh, that prior report that we did, darn near everything was over 200, and holy cow, one of them was over 300. Okay, that's where numbers can be shocking, and I was a little bit shell shocked last month looking at these numbers. So for me, when I look at the past month or so, very reassuring. Like I said, the doom and gloom report was last month. This month, much better numbers.
So I'm curious, like, let's break it down even further because how did that change? So if we look over here, we had about 400 listings each week, and now it's about 300. So the number of listings hitting the market was lower, and then you can see here the number of pending sales, right, in the 181, 113, 161, and then we jump here, it's
Right,
216, 190, 190,
right.
187. So not only do we have less inventory hitting the market, but now we had more sales.
Let's go to the next slide.
Okay.
And
So this
now,
was the part where we were saying, like, we had a trend. If you were to look at these points and the trend was going this
right,
direction, this is on the new listings. We're like, oh no, if this trend continues,
right,
new listings are going to get out of control. Meanwhile, over here, we had a trend that looked like demand was going down.
right.
Actually, these trend lines have reversed. Now the trend is that listings are coming down and demand is going up. So we're seeing a convergence, which is a good sign, and it's not getting out of control.
Right. And that's why it's kind of fun and insightful to visualize the data in a variety of ways. And so good news overall.
Yeah, I thought the message this month was going to be to sellers is don't chase the market down, but maybe that's not the message. What is the message to sellers at this point?
Call us, and we'll
Call
help
me.
you price the property. That's
Yeah.
really it, David. We work with buyers and sellers every day, and there's a lot of layers to doing a good job and a great job on helping a seller sell for top dollar.
Mm-hmm.
And so, the message is just be smart with how you're pricing the property, and it'll sell.
All right, next, mortgage rates.
Yeah. So, David, when we take a look at the mortgage rates, they've backed off just a little bit over the past week, still hovering just under just hovering under 7%. If it were to stay in this range, I think we would expect that our forecasts on the supply and demand side will hold true. However, if we go to the next slide, Fannie Mae, David, I know you haven't seen this yet, so this is a live feedback. When you watch YouTube, a lot of times they have these reaction videos, whether
Mm-hmm.
people are reacting to a song or some other thing. So this is our reaction segment where we get the impromptu David Shapiro reaction to the Fannie Mae news. If you go to the next slide, that's the final slide on this little section, which just gets into some specifics. So why don't you run with it?
In its May 2025 Economic and Housing Outlook, Fannie Mae revised its mortgage forecast, anticipating rates to reach 6.1% by the end of the year and 5.8% by the end of 2026. Homebuyers waiting for rates to finally dip below 6% for the first time in years may be finally ready to take the plunge. So just to go back here, I'm curious. So we're at 6.85 and they're projecting to be down to 6.1 by the end of the year. That's significant.
Yeah.
And a full point from now by the end of 2026. Great. One thing that I learned about this new paradigm we're in starting in 2020 was that things really happen fast.
Right.
And so what I'm expecting, if we take any lessons over the last 5 years, is that right now, and this happens, and I've experienced this over the last 20 years of my investing career, my business career, that it sometimes feels like things are never going to change. And then all of a sudden they change on a dime. And so it's very easy to feel like when markets are going up, they're just going to go up forever. And when markets are going down or they're stagnant, that this is how it's going to be forever. But I have a feeling that Jay Powell, the Fed, they're holding strong on rates, and it doesn't feel like they're ever going to change that. But when they do decide to change because something changes in the economy, then it's going to happen really fast. And it might even happen faster than Fannie Mae is predicting.
Yeah. And so how do we translate that into guidance for our buyers in particular? So who are these home buyers waiting for rates to dip? Well, the long game wisdom is don't wait. Go ahead and purchase your dream property now, because if you do wait till rates drop, the price of that property is going to jump. And that's just the way supply and demand works. So if you are ready to buy and you're interest rate sensitive and you can afford the additional bump in your monthly payment because you're not quite at 6 or under 6, now is the time when the market sentiment still hasn't caught up to this forecast to get a great deal, to get that sale price list price ratio result working in your favor as a buyer. And then when the rates drop, it's like, the anecdote that I've mentioned in the past, you marry the house and date the rate. And so it's not a lifetime commitment when you take out the mortgage. So anyway, that's my 2 cents, is if you believe what Fannie Mae is telling you as a buyer and you are literally waiting for those numbers to drop before you buy, I'd say let's talk about the wisdom of anticipating that drop, acquiring the property before the other buyers that are waiting are going to bid up the price.
Yeah, there are a lot of buyers waiting in the wings thinking that same way. And one thing I've always tried to do is have a contrarian view and not do what everybody else is doing. And so, try to think ahead, like you're saying, Lee. One thing we like to do is compile a lot of information from different sources. One person I like to speak to is Mark Sprague. He's a local economist, for a lack of better term. He's very in touch with what's going on with companies that are thinking about relocating to Austin or Dallas, just to Texas in general. So he has his finger on the pulse. And I asked him kind of what he's seeing. And I think he gave me a lot of info, but things to keep in mind. The average appreciation for the Austin housing the last 70 years is 3.5%. So those expecting the last 10 years appreciation of 5, 7, 8%, however you want to factor it, not going to happen. 3.5% is what we should expect. Interestingly, going back to 2011, when I was doing forecasts for investment properties, I was usually using about 3%. We outpaced that, but still the numbers work really well at 3.5% increase. Investors can buy, builders can build. There's a little bit more. It's just they know what to expect, and that's really the issue right now for a lot of investors, not knowing what's going to happen. But that's a really solid number. And if you're leveraged, you put down 20%, 5-1. So that 3.5% appreciation is more like 15+% return. So there's still going to be opportunities in the Austin area, even with a lower annual appreciation rate that we've seen over the last decade. He feels we're returning to a more balanced, normal market. And he thinks rates will stay between 6 and 7.5% through the end of the year. But despite that, and what we've seen over the last couple of years, is the market has held up so strong. Remember we had that guy who commented on our YouTube channel that we would see, 30% drop in pricing, and he'd pay us $100,000. So we haven't seen that yet. We haven't seen the 30% drop like I just showed. From the all-time high, we're only down 6.7%, which I feel like is holding pretty strong considering everything we've been through.
I'd like to point out that we also haven't seen that $100,000 from the guy, David.
We're waiting on that. If he's actually going to pay, we'll drop some sort of Bitcoin address. However he wants to pay us, we'll figure it out.
Yeah.
Another thing, we've been doing a lot with, or I've been doing a lot with AI and how that can improve things for our team and for our clients. One thing I thought I would do is I'm going to ask ChatGPT, I'm a buyer. What should I be thinking about? And just see what it's telling buyers right now and kind of comment on that. It's saying leverage increased inventory, exactly what you were saying, Lee. Negotiate confidently. Many homes are selling below asking price. In May of 2025, 69% of homes sold under asking. So providing buyers with room to negotiate, right? What we just talked about. Secure financing early. Getting pre-approved can strengthen your position, help you act quickly when you find the right home. I think that's great advice. We don't even go out and look with clients until they're pre-approved. That's, you don't want to, it's a number of things, but mostly you don't want to think you have $1 million budget, go fall in love with $1 million home and then find out you can't buy anything over 900 grand. That would be heartbreaking. So we want to make sure we get that done up front. Consider turnkey properties. I thought this was a really good tip. Due to rising renovation costs and labor shortages, fixer-uppers are less appealing. Opting for move-in ready homes can save time and unexpected expenses. If you've never done a big renovation, I don't think this is the time to probably take it on, unless you just can't find what you want. That's probably the caveat for building your own home right now or for taking on a big renovation, because then you can get exactly what you want. All right, here's what we got. Advice for sellers. Price competitively. With increased inventory, it's crucial to price your home appropriately. Overpriced homes may linger on the market, leading to eventual price reductions. This is something I'm even guilty of as an owner, of seeing this ownership bias. No, my home is worth more than those neighboring homes, and wanting to price my home higher. And I this year made that mistake. The home sat, and despite Lee's guidance as my listing agent, saying that, hey, here's where you should price it at. No, Lee, come on. My home is worth more. Let's price it higher. So everybody, even professionals, have this ownership bias. So just recognize that and just know if a professional comes in and shows you, here's the homes, here's what I think it should list at. Sure. Lee is very good at kind of having a collaborative conversation about that and open to somebody pointing out a feature of the house that maybe we overlooked as what the value is. And okay, sure, let's add on another 20,000 in value for that thing. And let's see where we come in. We'll have that conversation. But man, even I'm guilty there. Enhance curb appeal. Invest in minor improvements and staging to make your property stand out. Homes that are well presented tend to attract more interest and sell faster. Yes, totally agree there. We're definitely staging homes. Curb appeal, the first thing a buyer sees. Buyers have the opportunity to be picky in this market. And so you do not want to give them a reason to walk away. I don't want to deal with, this one thing. We've been doing pre-inspections on homes and just knocking out lots of little things that could maybe deter a buyer. Be open to concessions and stay informed. Keep an eye on local market trends. So go ahead and subscribe to our channel so you can stay up to date. That's what ChatGPT just told you to do. And then working with a knowledgeable real estate agent can provide valuable insights and guidance. Of course, we agree with that. Yeah, just one of the things I thought that'd be interesting to check out is what AI is recommending. And if you're curious kind of how we're using AI more, feel free to reach out. And if you're thinking about buying or selling, and we can talk to you more about what we're doing with that and strategies.
One thing I'd like to just kind of mention on that topic, David, and, whether it's working with you, a true real estate expert, or out of state clients who are not real estate experts but have a property to sell. So walking the fine line between expertise and communication and compassion, and empathy for our clients. What we try to do here at the Shapiro Group is provide expertise, to do it in writing, and then work with our client if there's a difference of opinion, to, as you said, let the market tell us what the outcome is going to be. As a seller, it's always the same, with that bias, and it can be a process. So if we can earn your trust to understand that we're just trying to do the best thing for you, which is not only to sell for the highest price, but to minimize the hassle, the heartache, and the headache that can go with a listing that goes stale on the market. It's a delicate balance, and we do our very best to communicate in a way where people can sense, certainly the expertise, but also the compassion for trying to give their thoughts an opportunity to maybe prove themselves correct, or let the market tell us, that actually, our numbers were the right numbers to have gone with in the first place.
Yeah, that reminds me of a listing we had earlier this year, a $2+ million listing in Bolden that we had an offer pretty quickly that was below what our seller really wanted to walk away with. And, we had a conversation and we gave our guidance. And this is where it's really hard to quantify, 60 years of experience between us to have some of these conversations. And we negotiated it. He ended up taking that offer. And, looking forward here months later, I've had multiple agents reach out and just be like, dude, how'd you sell that thing? And, he feels good. Like, look, he, at the time he was hoping he would get a little bit more out of it, but taking that early offer was really the best decision for him. And he really thanked us for our guidance and helping through those tough decisions. Like, those are really tough decisions for a seller, for somebody that this is their biggest asset. This is their nest egg. They really want to get every dollar out of it. And we totally understand that. But we have to balance trying to eke out every dollar with timing, other variables. There's just so much at play. And it's really hard to just give one size fits all answer to these things. We're really having in-depth conversations, understanding our clients and being able to give advice to them for their exact situation.
Right.
And that would be different. The same property with a different client might have a different piece of guidance. And so this is all very case by case. And so that's why we love chatting with people and trying to understand their goals, understand their family, their needs, and then being able to give personalized advice.
Right.
Again, please, if you have any questions, comments, go ahead and drop them down in the comments below. And if you want to chat with us more, just go ahead and shoot Lee a text or an email. Go ahead and in below, there should be a link to book a call directly with Lee. And we'd love to have a conversation with you and kind of hear what you're up to. And go ahead and subscribe so you get updated monthly. This is the place where we post these. And what else? What else we got for people, Lee?
Just that we're here for you. It's a day-to-day adventure for us, and we'd like to be part of your real estate adventure. So get in touch, and we'll talk.
Cool. Thanks for joining us, everybody. If you got a lot out of it, like it, share it with a friend. See you next month.
Thanks, everybody.